You can, yes, don't sue us for all the things that we say, but you can call and ask us opinions. They're like assholes. Everyone's got them, and
I
this is
got
what we're
multiples,
sharing today.
not multiple assholes, multiple opinion. Hmm.
So are we all good? And today I'm going to talk about self-employment and what that means to buy a house in COVID days. And then I think Rachel's going to talk about what happens after you buy a house and if there's a problem. But
Yeah.
yeah,
With the frenzied market that we're seeing in Southeast Michigan right now, I think this is important to take a step back and take a breath and discuss. It's a continuation of what we talked about last week.
well, I would say it's not just Southeast Michigan because
No,
it's
but I
crazy
have
enough
to,
over here too.
of course, but real estate norms and customs and contracts are different across the country. And if anybody is watching in California, I want it to be clear that anything I say going forward is dealing with Southeast Michigan. That's what I know. That's
Fair
what I
enough.
know and love. So it's a little bit of CYA every time I say that.
Sorry, I'll try to tuck this so that it's not crazy falling in front of my face.
As long as both eyes are visible, we're good. And do me a favor throughout this entire episode. Yes, do more of that.
Always.
I say yeah a lot. So
Yeah,
if
yeah,
I
yeah.
if you buzz me, just bzz, bzz. If I
I
yeah yeah
if if
yeah.
I start buzzing you, that'll be my equivalent of going yeah, yeah, yeah. So I can't do that. I can't promise I'm going to do that. I'll say that.
Okay, all right. Well, anybody watching, if you catch it, feel free to call in and shut me down. It's so annoying. I'm working on it. Always trying to improve myself. Anyway, let's get to the topic at hand. We've only got 45 minutes to talk about real estate. And you know that always seems like forever at the beginning of the episode. And then at the end, we're like, how am I going to wrap this up? We're almost out of time. I have so much more to say.
I think it's good company.
I agree. I struggled last week when I had to start this without you, or was it 2 weeks ago? And I
It
was
was
like,
2 weeks
ah,
ago. I was totally asleep. It was
yeah,
pretty embarrassing. I'm
yeah,
really sorry to leave you hanging.
that's okay. Shit happens. The show must go on. So, do you want to go first? Because I feel like, the self-employed, as a self-employed borrower myself,
Yeah.
it's different. And you can't, can I just like, I'm probably stealing your thunder here, but it kills me that I can't like position one way on my tax return and still borrow a shit ton of money to buy a
You
house.
don't you can't have your cake and eat it too. You just
Oh,
can't. And
I'm a,
everybody wants to. You're guilty of it. I've seen your tax returns.
yeah,
Every self-employed person I've ever met is guilty of it. And that's one
yep.
of the benefits of
Well,
being self-employed.
pause on the guilty because it's literally operating inside of the parameters
Correct.
of the rules. I'm not breaking the law with my tax returns. I am merely
No.
maximizing available,
Yeah. You are
what was
using
the word? What
the
are they
the
called?
rules as they're written is not to exploit. You're following the guidelines, and so does every.
Correct.
I shouldn't say
Guilty
it's
sounds
not
so like
guilty.
you criminal, you cheater, and that's not it.
You're all innocent of doing it the right way. I will say sometimes
Oh,
I question a few write-offs and what line
hold
things
on.
are on,
Can
but you're
can
working within the system that's then
what did
provided.
you say? You are innocent. What did you just say? That was perfect.
I don't know. You'll have to rewatch it. I said
Rewatch
you're
it.
innocent of
You're
following the rules that have been provided to you and working within the parameter of the system or something like that.
Yeah, you're guilty of filing your taxes the right way. I don't know. It was beautiful. I'm totally going to go back and watch it and quote you forevermore.
Well, so self-employed people, I love you. Your taxes are super amazing. There are specific ways in which you file your taxes. Again, I'm not a CPA. I'll say this, if Thaddeus can jump
Yeah.
in. But there are certain lines you can write stuff off, and then I add it back to your income.
What's
And
a
it's
good
not a
example of
giant
that?
secret, but most people just trust their CPA, which they should. But if you're going to buy a house for just just maybe look at the guidelines for how mortgage companies calculate your income before you buy a house. And then I want to talk about COVID specific self-employed stuff. But go ahead.
Well, yeah, let's go back to that because I do feel like since I know what you're talking about, we might be just jumping right into the deep end of the pool. So let's imagine I'm a self-employed borrower. I've never bought a house before. What the heck does that mean? You add something back in. Like I pay somebody else to do my taxes. I don't know what's in there. I just know that my tax guy gets my tax bill down low. And then when on paper, let's say I am making $50,000 a year. Like that's what I am paying taxes on. Even though my company is making 120, we have tons of overhead, whatever. And I call you and I say, hey, Cassandra, I want to buy a $350,000 house. You look at my tax returns to verify my income, right?
Yes, because there's
And
no
that
pay
says
stubs or W-2s for me. I have to look at your actual taxes.
Okay. So after looking at all of my stuff, let's say you see that I maybe don't show enough income to buy the house that I want, but you also do this extra thing, I know, where you look at my filings and take some of my deductions and put them back on the income side of my tax return or something like that?
Yeah. Yep.
Okay.
There are specific line items, and it's a whole formula, and you can literally Google it, and it'll tell you what lines are deductions to the IRS and you pay less taxes on. But as a mortgage professional, we add those back into your qualifying income.
So you can still count them. And do most loan officers know to do this? Because it seems
God,
like
I fucking
no.
hope so. I
Seems
mean,
like no,
but to get ahead of it, like just to get out ahead of it, if you're self-employed and you want to buy a house and you've been writing everything off, which you're totally allowed to do, but like I see people who make $250,000, and by the time the CPA is done with it, that bottom line, Rachel, I've seen it show a loss. And I go, really? You take in $250,000 of income and you pay out $254,000, so you're negative $4,000 for the year. So you owe nothing in taxes. And are you fucking kidding me? Like, why would you continue to work if you're losing money every day?
And you can totally do that. And you're running almost like a nonprofit in that scenario.
Yes.
But you can't also have that and then say, I want to buy a house, right? Yes. Because those are large sums of money.
Now, there used to be a way you could do that. Those were coming back, like non-qualified mortgages, which is basically...
What does non-qualified mortgages mean?
It doesn't meet any of the parameters of anything normal. So you're basically it's not a qualified mortgage. You're literally losing money. So there are lenders out there that will look at 12 months of bank statements to average your income. So they're looking at it in that real way. But those are
does not qualify. Right. Sorry to keep interrupting you, but does not qualify. Does that mean it doesn't qualify to be insured by the mortgage insurance people? Or does that mean I don't qualify for a mortgage, but you're going to give me one anyway?
Yeah, it means all that.
Really?
I mean, non-qualified mortgage means Fannie Mae's not going to insure it, Freddie Mac's not going to insure it, FHA is not going to insure it, rural development, VA, mortgage insurance companies, nobody's insuring that mortgage.
But didn't you say last week that would be loan sharking? Like it's against the law to borrow money to buy a primary residence or something. What were we talking about loan sharking?
No. So there are loans out there. They were coming back. They're now much hard. You need far more down payment than you did before COVID. But basically, instead, they're going to look at your file and look at your credit report and look at 12 months of bank.
Like a lending institution of some sort, not just.
Yes, and they're very few and far between.
Down on the corner.
Right, like not a person.
Market.
There are lenders who will still do that. But remember, those lenders still package your loan and they borrow money against it in mortgage-backed securities, and that's a whole different show.
Even the non-qualifying ones.
Yeah, even the non-qualifying ones, but there's no appetite for risky loans. Shocking, right? I mean, but I wanted to talk about self-employed people relating to COVID. So if you're self-employed now, and you're showing a profit, right? Say the money's fine and whatever, you qualify for the house. So with COVID, there were a whole lot of overlays and like weird rules, but Fannie Mae and Freddie Mac and FHA, they've come out with some more stringent guidelines. So if Rachel, say you wanted to buy a house, great, your income is great. I need a year-to-date profit and loss for 2020. And it can either be audited, which is done by a CPA, which costs money usually, or it can be an unaudited profit and loss, but if it's unaudited, I need 2 months of your business bank account, or personal if you run everything through your personal. This is causing people some hitches because most people's year-to-date income is lower than it was last year, depending on your industry, but
Yeah.
COVID in general, everything's down. Are you
Yep.
down?
I'm
Not to be-
down. I was
You're
off
down.
work for 2 months. Are you kidding
Sure.
me?
Which means, yay, they're going to take, which means you have declining income. So they're going to take your 2018, your 2019, your year-to-date 2020. They're going to divide that by, let's say, 30 months, 31 months, right? Because we're at the end of July. So 7 months for July and then 12 and 12. I got to say why I'm doing it. So they're going to take 31 months of income. They're going to divide it. So your loss is going to definitely impact you. You're going to have to say why your year-to-date is low. And then in some cases, you're going to have to, and this is depending on the loan program, you're going to have to show why that you have business currently, current invoices, future income coming in. Like, it's super fun. And all self-employed borrowers are really having a good time with it. All loan officers are too, because we're super busy. So what we really want is more paperwork. We're really excited for more paperwork. So are the underwriters. Everybody just wants more.
Yeah, absolutely. I mean, that's forcing, I don't even want to talk about like what that looks like on an economic chart. Like,
Dude, files that used to be pretty thin are, if I printed anymore, which I don't, but like we're seeing, 4-inch thick paper files just to over document. At this point, a lot of lenders are over documenting because they need to make sure Fannie Mae and Freddie Mac will purchase it. And so this is the reason. Let me tell you the reason.
Jake says it's so much fun. Sounds like he's dealing with thick paper too.
He knows, all the paperwork. So one of the reasons that lenders are over documenting, over and above what the guidelines say in some cases, because say the shit hits the fan again, and you go at request of forbearance after you've made one payment or no payments, right? We talked about this in previous episodes. If the lender has all the extra documentation, right? Hey, Fannie Mae, I followed your guidelines. Over and above that, I got this, and this, and this, and this, and I got all of these things, and I over documented. They want to make sure that Fannie Mae is going to insure that loan, or Freddie Mac or FHA. Well, they're really throwing sprinkles on top of an already iced cake, in my opinion. But
so what happens if, sorry, I've got a screen issue here. What happens if Fannie, like at what point in the process would Fannie or Freddie say, oh no, we're not going to insure that loan? That would be, you'd get declined, right? Like is there a risk to the lender to get past closing and then Fannie comes and says, I don't want that one, it's dirty. What happens to those?
Yeah. The lender basically has to,
they're exposed because it's not insured.
They have to hold it. They can't sell it as mortgage-backed securities. It basically turns into a portfolio loan that the lender can basically never sell and must service for the life of the loan.
They have to keep it on their books forever.
And yes, and so if you knew which everybody's like, so what? However, if you knew the way
wouldn't you go to those people and just refi them into a loan that fits the profile so you can off it?
Most lenders often try to basically fix the loan, and so that they can repackage it and sell it. As
That's
long
what
as
I would do.
Inherent, but sometimes they get stuck with these loans, and the way that the larger scale works, right? Do you remember our food supply chain going like totally wonky, and potatoes are rotting, and we're all out of toilet paper, even though
gotta kill the cows because the meat packing plants are closed. Yes.
Right. I can only put potatoes in 50-pound boxes and not 3-pound bags. So I'm basically hosed, and they all gotta die. So we've seen on the scale of how big things get and how micro it is as well, right? At the same time.
It's a fractal. It's a fractal.
Yeah.
Fractal,
so perfect word.
Yes.
Yeah. So the mortgage-backed securities are very much the same way. So like it all has to fit, and the systems are designed to do it one way. for the most part, right? They're designed, this is what we do, this is how it gets sold, this is how it gets packaged, this is where we put servicing. And then COVID, when the government's like, everybody can declare forbearance. We're going to change the rules. We're changing the rules every day. Oh, we're not taking that loan. Maybe that one we will. I know, right? I can't even tell you how many bulletins. I should have counted how many bulletins the rules have changed or whatever since COVID. But so lenders are like, this is effed up. We have to over document. We have to follow the rules. They're making up rules at this point, like, because if FHA hasn't spoken to how to treat something, but Fannie Mae has spoken to that, lenders are going, I'm going to follow Fannie's rule and apply it to FHA and rural development and VA. And they're just like, and you go, why? That's not FHA's rule. And they go, because it might be eventually, and it's the only guidance any agency has given on this topic, so we're going to just across the board. Like, okay. They're literally making stuff up, and it makes our job, my job.
Well, what happens? What happens if the rules are one way? Say I bring you a client, the rules say ABC, and you go, okay, these are new ABCs. We're going to do ABC, and we do ABC. It takes 4 weeks to get to closing. I mean, sometimes 6.
Oh, I have an example.
By the time we get here, by the time we get to 6, and you're like pushing it off to underwriting, which is like magical approval land. And they come back and say, I'm sorry, the rules now say 1, 2, 3.
Mm-hmm.
We can't approve this. So what happens? Is that what's happening in the back end when you're like gathering new documentation, calling the client? Now we need this, now we need that, because they keep moving the finish line?
Yes. So it's almost like a moving target. I have one that is cleared to close and closing tomorrow that went through this. The borrower took forbearance and the rules were changing in process. Mm-hmm. This has been one of the hardest loans I've ever had to do, merely because the rules keep changing in the middle of it. Mm-hmm. The documentation is so extra. So like they recently issued guidelines, updated guidelines that say any verbiage on the credit report that says affected by a natural disaster, you must prove payment history or prove that it is now not affected by a natural disaster. Now,
wait a minute. If it says, say that again. If it says something impacted by a natural disaster on the credit report, you're saying you have to prove that that's not true. So give me the scenario, like hypothetically, what would that be?
Okay. So the example I had is American Express literally wrote affected by natural disaster.
Why? What was the circumstance behind that line item on a credit report?
The same circumstance that was behind Freedom Mortgage line iteming affected by natural disaster on everybody's report.
So American Express just spit it out to all of their cardholders? Like, do I need to call them and have them?
Did. Or perhaps I don't know. I don't have the MX. It wasn't my account. I'm just seeing it. And the borrower has said, I never requested forbearance. I have been paying on time. And the borrower did have to show me 6 months of statements. And this was right at the end because the guideline changed partway through it. He's over it. And I don't blame him. It's fucking barf city. I mean, it's disgusting. The amount of stuff I keep having to go back, and I feel bad. Like I was losing sleep. Not that you could tell.
Right.
It's been really very trying. I mean, we're super busy. Refinances are super busy just because rates are so great. But the rules changing are like brutal. So if all realtors everywhere could just give an extra 15 days on the contract, because
I've been hearing that everywhere.
We're almost 100% over our volume last year.
Right.
We have not hired double those people. I mean, and so it's not that we don't want to close fast. Believe me, there's just not enough underwriters, and we're requiring more paperwork, and the rules keep changing.
So, and add that into the, like, appraisers are behind this and title companies are behind this. So that 2 weeks is probably barely enough. Really?
I used to order title and get it back in 4 or 5 days. It's now taking 10 to 14 or longer.
I'm seeing the same. And I'm starting, Did
you know about title? Oh God, I wish Drew could could join us. I'm not going to change it. Do you know there are 2 places to search title in the state of Michigan?
What do you mean? 2
There's
places?
there's 2, like, they're called the houses, I think, if I'm remembering right. And if Drew, if you're watching, you got to tell me if I'm right. There's one in Grand Rapids and then one over by Detroit. And so there are people that have seats at these 2 buildings. Imagine 2 buildings. You can have a seat at the building, or you can hire somebody with a seat at the building to do the work for you.
Yes, I did. I have heard this.
Yeah, there's limited number of seats available to actually search all the title records within the state. So
sounds like
those seats are very coveted. First American has one, I know that, and I cannot remember who has the other one.
That's probably why everybody else is a reseller, right?
Yes.
I don't know. Is this like the beer distribution network? It's some kind of fucking bullshit system where like the information is there, but you can't have it. You want to sell beer?
You can have it, but you have to pay somebody to get it, to retrieve it.
Not just somebody, one of these selected special people, because they paid for the seat at the table with only 4 seats or so. That sounds like bullshit to me.
Yeah, but I don't know how that's all done. But anyway, it's so, again, it's always done that way. And so when you get super busy, heaven forbid, they fucking add more seats. So more title companies could send a person there. But not to mention, people aren't clamoring to be title examiners. There's not a line out the door to examine title work for flawed errors and issue conditions. I mean, it's a
specific type of person that can do that job and enjoy it and do it well, right? Like, I
probably like my job, and like I could never do your job. It does not seem, and I point at the screen. I could never do her job.
No, point at the screen. This feels more like it's like I'm talking to Dad.
Okay, so now I'm done with my self-employment thing. Blah, blah, you do yours.
No, it's important. Mine is really an extension of the conversation we were having, I think, last week about my client who had a not so great inspection and then got into the home and found out. And this is not necessarily about this particular client, but, you know, stuff happens after buying a house. And I kind of wanted to talk about what recourse do you have? And it's a really short conversation because what you can do always depends, because the answer is always depends. But your legal recourse in Michigan is just like start suing people, and it's really fucking sucks. But your hands are tied unless you are mad enough or deep pocketed enough with enough time on your hands to go to court. And so and oh God, I'm getting all like tripped up here, right? Because people move into their house and find out that, I don't know, let's say.
Make something up. Make it good.
Because they're all catastrophic. You give me an example. What is something that would piss you off? What did you find after you moved into your house?
Oh, I mean.
You never would have known had you not been living in it. You know what I found in my house? Fucking carpenter ants. Okay, go.
Okay, go ahead. No, go ahead. Carpenter.
I've got carpenter ants, and I deal with them every fucking year. And thank God I have a good friend, Chris Percha, who's my exterminator, does an amazing job, all the insects. But, you know, I'm not a fan of like pesticides and killing shit. But every spring, especially when it gets really moist, I get freaking carpenter ants. So let's imagine I bought my house, the carpenter ants weren't disclosed. I move in and find out it's a real problem, and I am just pissed beside myself. Like, I have to like do this balance in my own head. Is it worth going to court and trying to sue them? And I'd have to prove that they knew and prove that they misrepresented. Is it plausible that the seller didn't even know there were carpenter ants or never investigated the problem? Like, there are so many freaking layers. So I'm reluctant to say this because I'm a realtor, but you know who you can sue? You can sue your realtor. You can sue the brokerage that realtor represents. You can sue the seller. You can sue the seller's brokerage, the seller's realtor. But
can I sue my home inspector or my pest inspector if I had one and they missed it?
So usually the short answer is yes, because anybody with $100 and an attitude can sue whoever they want.
I'm ready. I have got money to sue somebody, and I've got the attitude today.
So I'm glad you brought that up because every one of those people, if they're worth a shit, has a piece of paper that is a you can't sue me document, right? It's
Yeah.
the what is it called? I keep going disclosure. It's called the hold harmless. So my company has one because I'm selling a used product and it's not a product that I manufacture. It's not a product that I keep in inventory. It's nothing I can warrant. I can um I can't speak to the quality. I
What
can
are you
merely
throwing
yes. I can't do anything.
things?
It's outrageous. Um, yeah, so there's this lovely little piece of paper that says that you can't sue me. And here's what I tell my clients. Anybody with $100 and an attitude can sue whoever they want, but if you sue my company, the judge is going to, well, we're going to come into court with the document that you signed, and the judge is going to decide if it's worth a shit. So the answer is always it depends, and get your bearings. And all of this goes back to a buyer beware scenario. So courts don't like getting mired down with a fucking carpenter ant problem. And what are you going to do? Unring the bell? Make me
But
buy the house? What?
if it's like a foundation, like a big deal, like something
Yeah.
blatantly, like
So
that makes sense.
let me give you another example that terrified me when I first heard about it. And this is from earlier in my career that happened at my brokerage. One of the agents at my brokerage represented, I'm going to get some of these facts about who did what wrong, but the point is the same. Agent at my brokerage represented a buyer buying a house with deeded dock access. The seller was selling the house with deeded dock access. And that's a big deal in Michigan. People pay extra for water, and it's a big deal. It's a status thing, it's a lifestyle thing, right? Like you have a boat, and if you have deeded dock access, that means that in the deed to your property, you have the right to have a dock or put your boat on this dock in the water. So I don't know if the house was sorry, my phone rang, so I got a little bit mentally disrupted. I don't know if the house was on waterfront or not. So let's set that aside. The house had deeded dock access. The seller sold it that way. The seller's agent represented it that way. The buyer's agent found it advertised that way. Buyer bought it, moves in, finds out there's no deeded dock access. Hold on. Excuse me. Go ahead with your question.
It's a comment question.
Yeah.
If we were an attorney state, would the attorney, and I know they would have, reviewed the deed to the property and read and realized there was no deeded access? And who didn't look at the deed or who crafted the deed?
Those are multiple questions. So let's take them one at a time. So the first thing is, in an attorney state, the attorney, of course, would have caught it theoretically, but if the person looking at the deed doesn't know that the deeded dock access is expected, I don't think the result would have been any different in an attorney state versus a title state, because title companies look at that, realtors look at it. Most of us don't know how to read a deed, believe it or not, because there's a legal description in there. And you know who understands how to read a legal description?
A surveyor.
Yeah. Who else?
A title examiner.
That's it. Everybody else just trusts that the other guy's doing their job, and the other guy doing their job doesn't talk to the buyer who says, I want deeded dock access. And here's the motherfucker in lake communities, especially, like people make arrangements with their neighbors all the time. It's entirely possible that the seller thought they had deeded dock access, bought the property believing they had it, used it all these years, sold the property, and potentially somebody else who actually owned where the dock was also just bought that property, understood what they were looking at, and said, that's my dock. We see similar conversations with fences. Like, just because you buy my house and I got a fence right by the tree line, it's been that way. It was here when I got here. I think that's my property line. I've been mowing it this whole time. And then the guy on the other side of the fence actually gets a survey, which for whatever reason, nobody wants to get off their wallet and get a survey because they're thousands of dollars.
I know.
But if you care that much, if you really care on your $500,000 purchase, where your property line is, if it's important to you to make sure that lake property is actually yours, it's on you to find out the answer. So let's bring this long story home. This buyer gets in the house, no deeded dock access. He's pissed. And similar conversations happen around square footage. I bought a 1,200 square foot house. I get in, I measure it and find out it's 920. I'm pissed. I paid for a 12. I was bragging that I had a 12. I thought I had a 12. I'm suing somebody. And these are true grounds, and there have been cases around them. Of course, there are lawsuits.
Finish the story!
Anyway, okay, so seller, buyer sued and won. Sued against both brokerages. The insurance had to pay, the agents had to pay, because nobody took the time to look at the thing. And the buyer, because the buyer was trusting his agent, and the buyer's bringing the money to pay all the agents involved in the deal, and the agents and brokerages chose the title company, like the fucking responsibility has to land somewhere. And I guess I would say that, you know, brokerages and realtors make good money for a reason. So just make sure you hire somebody who's doing the work, or at least advises you, like, hey, it says it has deeded doc access. Here's what you have to do to verify, because I'm not allowed to verify your shit for you. Fun fact, as a realtor, I'm not allowed to verify. I can tell you where to find it. I can tell you what I think I know, but it's always going to come with a do your own due diligence, because I can't do it for you. I can't tell you if there's a sex offender living next door. I can't tell you if it's a safe neighborhood. You know why? Because your definition of a safe neighborhood is different from mine.
Well, that's almost redlining, and it goes against fair housing laws. You
Absolutely.
can't.
There are some.
Can you even say, I don't know, drive through it at night on a Friday and find out?
I can tell my client to do their own due diligence. I can direct them to resources. So if you tell me, are there a lot of sex offenders in this part of town? I can say, you'll have to check on the state website for the sex offender registry. Even if there's a sex offender 4 doors down. I don't know if one.
And you know it. You can't say it.
Well, if you specifically ask me and I know factually, not suspected or heard, I think I can say it. But what I can't say is,
would you though, or no?
That's a tough one. You know, I mean, I don't know how much personal stuff I'm going to disclose, but I mean, my daughter was raped and there is a sex offender on the registry because of it. So I might, I might, whether I'm supposed to or not, I guess I'd have to go look up the letter of the law. But if you ask me specifically, yes, I probably would.
Okay. I figure, I mean, it's just speaking of truth. So
yep. Nope. But that gets.
But I feel like nobody wants to be held liable for anything ever. So they're just like.
No. Well, that's it too, though.
Look it up.
The liability comes in if I said, like, what if you're looking in a neighborhood and I said, this is a really safe, family-friendly neighborhood. It's a great place to raise your kids. Oh my God.
You can't say that.
Shut me up. I don't know what you consider a great place to raise your kids. What if you are a homophobe and there are a bunch of homosexual couples in the neighborhood and I have tons of gay friends and I think they're amazing influences on kids? I don't know. I'm using like charged examples just to make a point, but
yeah, let's talk about politics, Rachel, while we're talking about all the things, and non-binary people. Let's just bring it home and do all the things.
Yeah. You know what? Everybody that just got named, you want to buy a house? Come see me. I love you.
Yeah.
Don't care.
I'm with you. I know. There's just so much things people won't talk about for fear of.
Because they're afraid of it. They don't understand it. And they think, well, humans have a tendency to us versus them so that they can feel better about being hateful to each other. This is a different show, but let's do this one too.
Okay. Like now, can we keep going or am I stopping?
No, we'll keep going with the real estate. That's what I'm here for.
Because I think our number count would go higher if we talked about philosophical stuff and black holes and energy and space-time.
Space-time. Hey, fractals made it in. And I think okay, so you really want to go there? There's never anything new under the sun. You're pissed off about real estate. You're excited about interest rates. You're mad because they went up. You're going to buy a house. You're going to sell a house. Did you know that buying a house is nothing more than a large-scale rental scheme? You're fucking renting that house for 7 years and then you're going to sell it and go buy a different one and just pay more rent. You have this delusion because you've been fed this story that you're going to own a home. But unless you save up the cash and just buy it, you're just renting it in a different way. I disagree.
Because I disagree, because
know
you're
you-
actually giving yourself equity. I understand the argument you're making,
but
but
you're
I
giving,
disagree.
okay. So you are giving yourself equity if you tap the equity and use the money, or you sell when your value is higher. So you're right. I mean, I agree, you're right. But I think there's something to be said for understanding that this dream of home ownership comes with all kinds of presumptions that are false. Just like your house is your biggest investment, tries to represent that it's an investment strategy, which it can be, but it's not.
Well, can we talk about how there was never such thing as a 30-year mortgage back in the 50s? So back in the day, you literally put 20% down and they would loan you, 7 years, 10 was long,
Now
to
you
actually
can do that
finish
with a
paying off the
car.
house. Oh, dude, do you want to talk about, like, I'm seeing $700 car payments, like a $70,000
Mine,
like a depreciating asset? Get the fuck out of here.
you know what?
Why?
Can I show you
Anyway.
something? I'm going to be this annoying. I'm going to take this off my wall. So bear with me. You're going to look at my guts.
I was hoping for boobs. Damn it, Rachel, come on, man.
My boobs showing.
There we
I'm
go.
trying.
There we
I'm
go.
trying.
Thank you. It's a cute bra. I love the lacy black straps. It's nice. Okay.
Okay. So I'm going to be that annoying chick that, oh my God, my wheels are wrapped around my blanket, you guys. Okay. I'm going to be that annoying chick who does like I'm going to go take a biology class and then diagnose all your shit, right? Okay. So I'm getting my master's and I love saying that. So thank you.
Could you twirl a fake mustache, as you said? I'm getting my master's.
Oh, I prefer like the goatee.
Oh, yes, that's better. Yes,
okay.
That's better.
This is what I want to show you. So this was part of my assignment, was watching a Robert Kiyosaki video, and I thought it was so awesome that I drew it for myself. And can you see it? I'm going to leave it up there long enough.
Poor middle class.
So he's talking about, hold on. So this is, listen, it's a diagram. So income, expenses, assets, and liabilities. So this is the money flow. So the poor mindset, generally, the blue line is you get a job, you make income, it pays your expenses, and you're done. Middle class, you get a job and you tend to take on more liabilities, like the $700 car payment. You buy a house. They're not making you money. They become expenses. I mean, you have the stuff, become expenses, and then you're done. Sorry, it's hard to do backwards.
I know what you mean.
Wealth mindset puts the money, whatever money, into an asset that makes money, and that then comes up into income. And it doesn't matter if you're just paying expenses or liabilities or buying more assets. It was interesting. I mean,
so is the wealth mindset taking liabilities completely out of the equation?
No, it's the important part of the diagram. Don't get too wrapped around the axle. It's just fucking simple. The wealth mindset points to moving the income from your job to an asset that's making you money. The reason I wanted to bring this up now is because you were talking about $700 car payments on a depreciating asset. And this is just, listen, none of this is not gospel. It's not, there's no one way to skin a cat, but this diagram made so much fucking sense to me.
So what's drawn in the asset box?
A house, like an income property.
I was like, excuse me?
One that's actually making you tangible profit, not like, because my house isn't, I'm going to put that down now. So yeah, let's flesh this out. My house is an asset, and I bought it when it was worth a lot less, and I have refied and taken some of that money out. In exchange for having that money, my payment is up, and if I want to cash out right now, I could make money on it. If I wait 3 or 4 years, statistically, I mean, this is like, who the fuck knows what 3 or 4 years is going to look like, but in 3 or 4 years, I might sell it for exactly what I paid for it. So I still had the value of living here for as long as I have, and I got what I got out of it. But it's not going to get me into retirement. It's not an investment like that.
Okay. No, I understand.
That's all. I feel like your house is unique. It's not, you can't just say it's an investment. You can't just say it's an asset. You can't, because it's its own thing.
historically, it is a non-depreciating asset that at the
Sure.
end of the day is at least a wash.
That's true for a
Historically.
401, but that's true for a 401k too. And people lose their asses in their 401k all the time.
Yeah.
But people generally across time, it's always going to be higher. Like and this is it. I just took a class for my master's that taught me this, but it's
I'm
true.
educated, and this is how it goes
Educated.
now.
That's right. Like, you're right. I learned a thing, everybody. I want to share it with you all.
Oh,
Like,
did you know? A lot of people don't know that I'm being present. I'm being Trump. So when you just learn something, and when you're presenting to digital, a lot of people don't know that a house is actually considered not an asset. Like, did you just take a class, motherfucker?
Yes, exactly.
A
That's
lot
why I
of
said
people
it
you
at the
knew 10 minutes ago. Okay,
Yeah. So,
you got to do that. A lot of people don't know.
Listen, I got something to teach you right now because I
A
learned.
lot of people.
Oh, you can see my deodorant.
No, you think that I can see it, but I guarantee you. I mean, I could get really close to the screen and try, but
Listen, I bought that Lumi deodorant and it's amazing.
oh, I have Humble Brands, and it's so amazing. Even my 13-year-old loves it, and he does not sweat through it, which is saying something.
Okay, well, I have a 21-year-old, and I have more people using my deodorant who love it than you do. I win.
You have a 22-year-old.
Yeah, and a 21-year-old.
21-year-old. Damn it.
Damn.
I was thinking, but it's a competition, so you're right. Your kids are older. Good job. Great.
Yay.
You win.
Okay. All right. So listen, we've got 2 minutes to wrap this up. And as always, I love that like we find our flow. But I'm going to wrap up mine and just summarize and say, like, again, I can't stress it enough. It's super, super buyer beware. And I'm not trying to scare anybody out of buying a house, just trying to help you do it smartly. And if you want to do it with borrowed money, I think Cassandra might have something to say about that.
Yeah, if you want to buy a house with borrowed money, it's a great time to do that. I still consider it to be an asset and far cheaper than rent, even if it is a big rental scheme, because somebody just told us.
Listen,
taking a master's class.
I've thought that for years. I had that thought long before my master's class.
And a lot of people don't know that. I thought that years ago.
Yeah, I can prove it. I wrote it in my journal. No, I think it's worth considering. I think it really stabilizes your expected outcome.
So I will tell you
delusion.
One of the main things I ask people when I'm doing numbers to refinance and structuring the loan, but more so with the refinances, how long do you plan to be in the house?
Can you see that?
Something intent property. What is your intent for the property? So one of my things is, how long do you intend to be on the property? I want to make sure it's worth it to pay a couple $1,000s to refinance and get a lower rate.
Yes.
Obviously, we've talked about that multiple times, but it has to make sense. And I suppose it is renting unless you intend to buy it, own it, live in it. And a lot of people won't commit to that.
It has a rental element, and it's certainly fiscally smarter than actually just renting, if that suits your lifestyle. I mean, if you're somebody who wants to move across the country every 6 to 12 months, probably don't buy a house. But
you'll probably hate your landlord if you're going to house rent.
What? Why would you hate your landlord?
Because you're your own landlord.
Oh, I do.
This asshole never
fixes anything.
Damn it.
We still got fucking carpenter ants, and this bitch is like half-assing it by hiring their friend to come haul. No,
I'm on the computer doing webinars, bitching, and not taking care of my carpenter ant problem.
I've had the same fucking stupid stove that came with the house, and it's from 1998, and it won't fucking die, but she won't buy a new one because she's too cheap. That's a perfect finishing conversation. Fucking stove. I hate
You're a terrible landlord, Rachel.
I know. No. You know how much I want this purple wall gone? Why can't I do this?
Right. Yep. You should talk to your landlord about that. Mark!
I know. He's gone. He gets the heck out of Dodge. It looks like Anna's joining me. It's 11:16. So we're going to shut this down. We'll do this again next week with more awesome topics. Anna, wave. Say hi to Aunt Cassandra.
Hi, Cassandra.
Hi, Anna.
All right. Bye, everybody. Go buy some real estate.
Especially if you're self-employed.